Over 11 years ago, I was given the opportunity to bid on a company called MAI. I had just left KeyCorp as CEO of Victory Capital Management, started a small little boutique investment management firm, and I got a call and said, there's a firm down the block and you should look at buying it. And I laughed. And I said, we're 3 people here. How are we going to buy any firm? And they said, no, really, you're perfect for this. I got the book. And as I started going page by page through the book, I did realize that it was a perfect opportunity for me. Well, sure enough, I made it to the final 3 and was very disciplined in the approach we took. And in the final 3, we lost initially. We lost to another large, well-known firm. I won't say who it is on camera. But over that time of them trying to get the deal done, they couldn't get it done. So lucky for me, they called me back about 4 months later and said, we couldn't complete the transaction. Would you be interested? I was able to do that. And I think it taught me a couple of great lessons. One is be patient. Second lesson is when the first transaction didn't go through, I withdrew my offer. So my initial offer was not what I was bound to do. I was able to renegotiate the price. And the third thing is it just taught you that if you do stay the disciplines and if it's meant to be, it will be. And it worked out just as well as it could have possibly worked out. Whenever you do any transaction and in any valuation process, it's really important to come up with what your vision of where you're going to take the company, what you think you can produce from that company versus what it's currently producing. In the case of the acquisition of MAI, it was clear to me there was one thing that they did exceptionally well, and that was really the ability to take care of their clients. What they didn't do as well was run a business. So it gave me the opportunity to sit back and say, okay, if we have a professional manager doing this, what could we do with this business? What do we need to do? What do we need to invest? What do we think those investments will return? And where could we take this business? And so vision is a critical part of any acquisition, because if you can't figure out, if you're just going to put 1 and 1 together and get 2, there's no incremental value or benefit of doing that. But if you can put 1 and 1 and get 3, 4, or 5, then you've really added tremendous value for yourself, your shareholders, your clients, everybody involved. And over 10 years, it's been a great opportunity. We started with $900 million under management with 50 people, and today we're 95 people with $4.5 billion under management. So and that wasn't the easiest 10 years to do it over with a 2008, 2009 period, but it's been a great learning experience for me, and I'm just very proud of what our team has built. Our recent transaction with Wealth Partners has many benefits, but the biggest benefit is they bring a team of 7 people that are experienced in M&A, that are essentially my strategic development group. And so I have them every day at my beck and call to help identify, help vet, help do due diligence, structure, help finance, any acquisition we want to do. So in an organization of our size of about close to 100 people, it's very difficult for me to run my business, take care of my clients, and do an M&A activity. But with them as partners, it's an unbelievable resource that we have with them being an owner, and they own the same equity I do, so they have the same vested interests I do. It's not like they can do the deal and walk away, and if it works, it works. If it doesn't, it doesn't. They have their own equity on the line. So having someone who's done hundreds of deals, a team of people, is just an enormous strength for us.